Vishnu, good morning. I think the last time we spoke to you, you had managed to, oh, you were in conversation with Rolls Royce. Correct me if I'm wrong, and there was
Yeah.
lots of activity and action. Of course, at that stage, you couldn't, tell us or share details about the order size or the execution. I'm going to try my luck. Can we get some more clarity on what that deal with Rolls Royce was?
Absolutely. I'd be able to share a little more information than what we shared last time. So first of all, thank you for having me on the show. We've had a great quarter. We've recently delivered, our results, and our growth in terms of our top line and bottom line has been great. And since you were talking about our recent order wins, and Rolls Royce was one of them. So that's a very strategic contract that I told you about. We've gotten Rolls Royce onboarded for their defense platforms, and we are working towards making some very critical parts that have come to India for the first time, and we are going to be making it. So we are in the process of developing those parts. This is a long-term contract, and we are in the process of development. So we are setting up, a dedicated plant for them, and over the next 1 year, we would start, a process of development. We'll finish a process of qualification, and we should start delivering, most of these rotating critical parts by next year. And we'd
Yeah,
start the
is it
process, and then, it's a
understanding then,
progressive.
Vishnu, for me, that you're going to be making an investment into a dedicated plant before you actually see that impact your revenues, which could potentially be 1 year out? Is that fair? And if that is correct, then what is the investment you're making in this plant, which is specifically being tailored for Rolls-Royce parts?
So, 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 so the way we work with our customers, because these are long-term contracts, it's not that you invest and then you start generating revenues. There's a very large, longish process of qualification where you have to prove to your customer that, you have the necessary technical capabilities, etc., to produce it. So we are in the developmental phase. We are dedicating. The reason why we are creating a dedicated plant is not just for this contract. We see that Rolls-Royce with us will be a very, very large relationship over the next few years. If you look at how we've grown with GE, how we've grown with Mitsubishi and others, you would see that, Rolls-Royce would have a similar and a much larger trajectory, because the aerospace industry is very, very large, and our TAM for these parts is extremely large. Today, we are addressing $28 billion of TAM, and what we are catering to is just 1% there. So that's why we are investing ahead of the curve in that. And this is the investment that we'd also raised during IPO. So we had raised about 240 crores of primary money, and about 100 odd crores is going to get deployed in infrastructure, which also caters to the plant that we're creating for our customers, and then 200 crores to create capacity, which is going to take care of our projections for the next 2 years.
Right. And what do you plan? What is the sort of growth that you're projecting for us? Significant jump in revenues, 30% in this quarter. Profitability is also significantly jumped. And I'll talk about that because I know your finance costs have also come down significantly.
Yeah.
Your payment cycle is also improving. So operationally, lots of good things happening. But before
Yeah.
I go into that, what is the guidance? A 30% growth annually is an easy do for you, or is there a
Yeah.
good chance that there could be an upshot to that number?
So we are giving a guidance of 25 to 30%, because that's something that we believe that our company can do for a really long period of time. Like I just touched upon the fact that we've only touched about 1% of where we can be. We're catering to a $28 billion TAM. So 25 to 30% growth the company will sustain for a really long period of time. Obviously, our attempts internally are to go above and beyond these numbers, but then for the street guidance, we are looking at 25 to 30%. And you would be able to see it that, at a quarter level, when we are delivering a 30% revenue growth, this guidance is well under control for us. And our profit margins also, like you rightly touched upon, whether it's EBITDA margins or PAT percentages, we have maintained that. Our EBITDA is consistent in the range of 35%, and that's the range that we've given. 33 to 36% is the range that our EBITDA is going to be for a really long period of time, because our product mix, if it changes, then it impacts our EBITDA percentage by about 100 200 basis points, but otherwise the range is pretty consistent. And our PAT has also gone up, and like you said, our finance cost has come down, and largely last year our PAT was lower because we had abrupt finance costs because of certain instruments in the company in the form of CCDs. But since those have been taken out during IPO, today our PAT, our finance costs are normalized, and so you see a PAT which is about 17 crores for the quarter.
Got it. Vishnu, good morning. Neeraj here. So,
Hi, Neeraj.
so this, these nodes, what you mentioned that your addressable market is just 1%, you hope to go to 10%. So obviously the opportunity size, if you do all the right things, is very high. Let's go with an assumption that you do all the right things. Why is the growth aspect or a growth projection then a 25% number? Is it because of capacity constraints and you want to go about it slowly, or is there something else?
No, so we are guiding at 25-30%. So if you look at our 4-year journey, right? FY21, we were doing about 120 odd crores as our annual revenue. This quarter, we've delivered 98 crores. So that is, whatever we were delivering in a year 4 years ago, we are delivering in a quarter. So we want to be consistent with what we are saying. We want to grow. And the reason why we are saying 25 to 30% this year largely is also because a new plant is going to get created this year. And next year onwards, we will start getting, output out of the newer plant as well. So next year, our growth projections could be slightly higher. But right now it is 25 to 30% because we want to, and we are well within, the guidance that we are giving. In fact, we have more than delivered that in the first quarter. But we are very confident of what we are guiding the street for.
Sure. Okay. So one question now, because you're doing multiple things, right? I mean, I believe this engagement with GTRE for ATGG engines, then the whole Rolls Royce piece, and some other things that you're doing. I believe you have qualifications for multiple things. So I believe there are a lot of adjacencies. What I want to understand is how does your capacity come on stream for various streams of work that you might be doing? And what does the business look like 5 years out? I mean, tell us what it is right now in terms of revenue heads or verticals. How does it look like 5 years out in terms of contribution and possibly growth projections?
So I think that's a very interesting question. So I'd start by saying, we have a 5C strategy internally. Everything that we have to do in our business is dependent on the 5Cs. And the 5Cs for us are customers, contracts, capacity, capability, and consistency. Right. So our growth strategy is based on these 5Cs, and our investments in the business, our investments in plant, machinery, or infrastructure are dependent on how each of these parameters that I spoke about are growing with us. Now, speaking about the business, we cater to the energy industry, which is the power generation industry, whether it is gas turbines, nuclear turbines, or steam-based turbines. We are qualified to produce parts for all of these critical applications, right? We are approved by EDF, that's Electric de France, which controls major nuclear plants, in France. So we are even approved by them. In terms of aerospace and defense, that's a second focus area for us. This year, this quarter, we've delivered roughly 20% of our revenue out of aerospace. And the third business vertical for us is oil and gas. This vertical is under qualification, but we are anticipating, very, very large growth coming out of this business. So our split today is, roughly about 80 odd percent power generation or energy business, 20% aerospace and defense, and about 1% because oil and gas is in qualification. But when you look at it from FY27 onwards, we will see that the business is largely diversified. You will see 50-55% coming out of energy, whereas the balance 45% will be contributed by aerospace and defense and oil and gas, because each of our customers are growing at a much larger rate. Whatever took us, say, 16, 17 years in energy has taken us about 4-5 years in aerospace, and about 1.5-2 years in oil and gas. Oil and gas business has already started generating revenues. We'll be able to demonstrate multifold growth this year, and also you will see a multifold growth in the oil and gas vertical for next year as well.
Vishnu, any other significant orders that you're currently bidding for? I know you've signed significant ones with GE Vernova and Siemens Energy in the recent couple of weeks. But in terms of tenders, in terms of orders, can we expect big bang announcements? And, I know you will not be able to tell me the exact size and timeline, but give me some perspective. And of course, if that's and also what your closure rate is if you've tendered for a few big deals.
Sure. So to give you things in perspective, we were at about 1,800 to 2,000 crores of estimated order size while we were going for an IPO. Today, as we speak, our order book is anywhere between 33 to 3,400 crores. Now that's adding about 1,300 to 1,400 crores in a period of about 6 to 9 months. Now this is where we are. If you had spoken to me at the end of the last financial year, we were at about roughly around 3,000 crores. We've added 300 crores of orders across, five customers. So, this period we've bagged about large contracts with Baker Hughes. We've two contracts with Baker Hughes, one very very strategic project with GTRE and DRDO in India for GTRE. I mean ATGG engine, advanced gas turbo generator engine. We've backed orders from G1 Nova. We've backed contracts with Rolls Royce, and there's also another contract that we've backed from one large engine OEM. I won't be able to name, but yeah, we've due to confidentiality norms, but today as a business, we have all aero engine OEMs working with us. Today as a business, we have 80% of the energy top customers working with us, and 35-40% of the oil and gas customers working with us. So we are at a landscape where we have the right set of customers, we have the right set of product profiles with them. Our margins are good and capacity is incoming. So I think the best years for Azad are yet to be seen, and we will continue to grow at the guidance that we ignore.
No, that's not a question at all. I mean, I'm sure the best years are ahead. The question was only the pace, by virtue of the fact that the
No, I
street
think
really
so. The
bakes
next
in.
year, next year, once the new plant comes in, you would see that our growth rate would slightly increase because our only constraint today is capacity.
Capacity, sure,
Right.
sure.
Yeah.
Vishnu, lovely talking, as usual, by the way. Thank you so much for taking the time out. Look forward to talk to you post your Q2 numbers then.
Thank you. Yeah, looking forward to it as well.